Well, welcome everyone so much to our evening tonight. Thank you for taking time out of your Thursday night. I know it is really cold outside, so maybe it's not so bad being here. We're hoping to make it educationally positive place for you. Hopefully, you leave with a lot of information, and we're looking forward to it. I'm your host, George Douzenis, and my co-host, Helen Moshis.
Hello, everybody. Welcome. Thank you so much for joining us.
So avoid these costly mistakes. First time home buyer class. That's essentially what this is. We're going to look at some mistakes that people make, how to not make those mistakes, and we're also going to look at just avoiding some of the myths out there regarding home buying and see where you're coming from as well. Oh, my screen just went a little. I probably could have also named this like how not to screw this up, because people make mistakes when buying their homes. And again, we're here to make sure you don't make the same mistakes others have made and not the same mistakes that we have made. I've made them myself as a home buyer. Just let me. So, are you ready for an interactive presentation? Love to see your cameras on. I get it. Sometimes people are camera shy, but we're hoping to make this as interactive as possible. Between myself and Helen, we're going to be monitoring the chat. Feel free to raise your hand, drop any question in the chat, and we're gonna circle around at various times to answer those. So don't hold back. If there's a question, just fire away. So let me just ask people right now, how are you feeling about home buying, about the market? Are you concerned? Are you feeling stressed out a little bit, intimidated, anxious, a little uncertain where prices are going to go? We keep hearing on the market that in real estate that just homes aren't selling, and they are selling, and prices are too high. And next week we're getting another interest rate announcement from the government. So I get it. There's a lot of concern out there when it comes to just making that purchase and trying to get into the market. So, Rahul says intimidated. A
I'm
fear.
also curious for everybody. I know this is like we generally host a webinar, well, like at least one per month. And I'm just curious to know how many people have this as one of their resolutions. Like it's January. Um, is this the year that you said this is the year I'm buying a home? Do we have anyone like that on the chat?
That's a great question, Helen. Just to bring that into the market. That's right. So Elsa says as well, uh, said fill in fan.
So you're on the right call. That's what we're here to help you navigate the whole process. And like George said, what not to do.
And Venice says, can I afford it? Well, we're going to go through some of those questions and see if we could knock down some of those barriers. So, big elephant in the room. Let's just get in there right now. Obviously, Canada is experiencing and the tariff world that exists. And let me just lay it out for you. Eventually, I don't know when, but eventually, all of this stuff will be resolved. It's only a matter of time. Might be next week, could be a few months from now, but everything will get resolved. And I wouldn't let this idea of tariffs hold you back if this is something that you're looking to do. This was just from a lender of ours. Oh, hold on, my screen is just. I'm working on one monitor, so it's a little aggravating. But this was from one of our lenders, just indicating that um, rates are dropping either today or tomorrow, just for your information. And uh, so, even though these tariffs are out there, it doesn't mean rates are always up and down, right? But our goal tonight, it's an easy one. We want to make sure that you feel completely in control, at ease about the process. I want you to say by the end of this presentation, look in the mirror, look to your partner, and just say, you know what? We got this. That's our goal, our ultimate goal tonight. And if you stay right to the end, we do have some valuable giveaways for you as well. Heck, why wait to the end? If you scan that QR code right there, it'll allow you to download a Dominion Lending Center's buyer's guide. And if you don't have an ability to scan the code, just let me know and I can send you the guide as well.
Well, I'll also drop it in the chat, so just stay stagnant there while you continue.
Perfect. So if good little reading material just to get yourself started. So what we're going to cover tonight, introductions just by myself, George and Helen, the services we offer. This is a homebuyer's masterclass by Helen, homebuyer benefit programs by myself, and avoiding mistakes that people make, and a little bit of Q&A. So we're hoping to get through this pretty quickly. Like I said, if you have any questions, just drop them in the chat, and we're going to cover. We will be covering those as we go along. Just a why am I able to be up here? Why am I able, like, what makes me qualified to sit here and talk to you regarding real estate, regarding mortgages? I've been licensed since '09. I'm part of Dominion Lending Center's Expert Financial. We're located in Mississauga. Been in real estate for several years, passionate sailor, mountain biker, and I do donate to a couple organizations, Canada Helps and Canada Care, just to help people out of poverty and also to help eliminate human trafficking. And also part of a group called 100 Brokers Who Care, where we generally donate money to families that are in need. So that's a little bit about myself and what makes me qualified to stand up here.
Hi, everybody. I'm Helen Moshis. I work for eXp Realty. A little bit about me. Before getting into real estate, I worked in the banking world. I was a financial advisor, planner, manager. And then I transitioned out of the bank and got into real estate. Um, Part of what I learned as being a financial advisor has helped really make me successful, especially with first time home buyers, because I'm able to go through I do a yearly analysis of your financial profile and are able to properly assess your credit report and your financial status and help you navigate around that and get you into home ownership.
So you're getting the best of both worlds between myself and Helen on in the home buying process. Uh, just a couple of our lenders. We work with a whole swap of lenders. Some that you know, like the big banks, and others that you've never heard of before, but they all play a role in our world. So why? Why am I doing this? Why are we doing this? We believe that real estate is probably the greatest investment you can make. And we believe that everyone should have an opportunity to experience home ownership. If not today, then to help you to get there tomorrow. And our goal is to be your guide in this journey. This is your journey. And it's about you. It's about the dreams that you have for yourself, for your family, for your partners. It's that dream for you. And how do we make that happen? A couple testimonials of clients that we've had over the years. So some really positive comments as well. And if Helen, if you want to, you can start your
Yeah,
master
so
class.
these are just some of my first time home buyers. This is Elaine, and who I helped purchase a townhome. That's me, sorry. There was Melanie who purchased her first condo, and now we're looking to purchase her second and third one. And then there is Ty Theophilos, as he goes by, um, who was one of my youngest at 19 who purchased his property, and he's an influencer. So it was a little bit more difficult to get him approved based on the type of income that he has and just lack of credit history, but we were able to accomplish that for him.
Well, Helen, take it away. The roadmap to a
The
successful
roadmap
home
to a
purchase.
successful home purchase. Okay, so I love back and forth. So I'm going to go through my little speech, but please feel free to like ask questions while I'm, you know, touching on points. I'd love for people to be interactive with me. So basically, the roadmap to a successful home purchase. What does that look like? So before I go to my next slide, do we know on average when we're looking at the Greater Toronto, like downtown core, what the average price for a detached home is? Can anyone guess?
The average price of a detached home in the GTA.
Close, close,
Got a few answers: 1.6 million, 600,000, a million.
close, close.
900 square feet is about a million in Toronto,
So
close to
we're
2
looking
million.
we're looking at 1.3 is what the average is. So one and a half, one, you're close. Yeah. So ultimately, it all depends on your budget, your personal profile. We're going to go over a couple of things because ultimately, your goal and our goal is to get you into the market, so that you get out of what usually you're renting, getting out of paying 100% interest to paying 4 to 5% interest on a mortgage. Okay, it's not clicking to my next slide. Okay. So a little bit about me. Like I said, I used to work in banking. I've been in real estate for 4 years. Prior to that, I did own a design and build company where we would build custom homes. And then I also worked as a realtor assistant, a marketing assistant before I actually got into real estate. So I've literally worked all through the trenches into, yeah, here we are. Um, I was, and also I am an accredited buyer agent. It's a special course that I did to assist specifically buyers. Um, so I'll go over my timeline. So I was a licensed financial advisor, a licensed real estate agent. In 2022, I joined the company that I'm with now, EXP. I've become a sponsor, so I do run my own little team of realtors. And also, I am completing my Chinese medicine doctorate. That's my side passion project, I call. So this is one of my clients. So what I do, how I started my business is I started with um, leases, and I help those people transition to buy by reviewing their credit reports, um, and just putting an action plan in place as to how they would be able to purchase. And I would like, so I don't just sit down and have like a transaction. I go through, we put out a whole plan together so that it's not, okay, you're going to move here. Your plan is to be there for a year or two. And then we transition you to the next phase. And that's something we're George and I, and this is why we work well together. We are not a transactional kind of, you know, person. We like to create a relationship with you, and we like to foresee that relationship through all stages of your life. So we're here for life, basically, if you let us. Um, something.
All right, the 8 essential steps.
Yeah. Sorry. So first we start, I said we would start with your credit score. Does anyone know what the minimum score that a bank is looking for that would be considered good to be approved? And also, how many of you have those apps, either on your banking app or on your phone, that would tell you what your credit score is? So the score is out of 900. That's the perfect score. So out of 900, okay. So
Yes, yeah, I have the app.
Credit Karma. So RM, you're right. It's 680. Yes. Um, okay. So basically, once you have, like we always say, to have an app or a monitoring system in place so that you know where you stand with your credit score, then your next step would be to get pre-approved for a loan before you come see a real estate agent. We want to know what your budget is. And also you want to know what your budget is so that you know what your home within that budget looks like, right? Because I'm all about setting proper expectations. Maybe you want to live in a $1.5 million home, um, but maybe that's not in the horizon at this point in time, but will be in the next 3 to 5 years, right? So find the right real estate agent, do your research, hire an agent with a proven track record. There's 85,000 agents. We'll answer that in a second, how to get a pre-approval. That's something that George can help you with. So there's 85,000 agents in the greater Toronto area, of which a small percentage transact more than 2 transactions per year. So you want to be able to speak to somebody, one, that has active knowledge of the market and is transacting on a month-to-month basis. So I can tell you that roughly I do about 10 transactions per month, of which those 10, 2 are at least purchases.
When I bought my first home, I used a friend who was a realtor who had never transacted before in his life. And it was not a pretty process. We're still friends though. So yeah, it's really important to get the right agent.
And also, just once you get your pre-approval and you find your agent, then you go house hunting. You want to look at, areas, criteria. Like I always say, write down, like every time I meet with someone, I don't ask them, you know, how many bedrooms, this, that, the other. I'm like, tell me what you envision your life feeling like living in this home. Like where are you going to set up your bedroom? What are you going to do? How's your living room going to look like? What do you envision that looking like? And how do you envision feeling in that space? And what do you envision outside of that home? What kind of amenities? What kind of access to transit? Do you need parking? So I think those are the key things. They're the qualitative instead of quantitative questions that I always ask that I think are super important and that you should focus on as well, because the better like the better you know what you want, the better quality of life and the better product you'll find in the end. And then your next step obviously is, after we're done house hunting and you have a discovery process, like I like to call it, we then find a property and we make an offer, and also I guess another thing that we do, and George and I collaborate together, is that when you're doing an offer, we find out about who's selling it, what kind of mortgage they have on their property. Is it a power of sale? Like we find out, do they own other properties? Like how motivated are they? So we do our background check. We just don't put you in blind, and are super excited that you want to offer and want to transact. We make sure that we do all our due diligence and that we put you in that best possible position to get the best price and outcome with the transaction. Also, so with offers, uh, they either are firm or conditional. Now, the reason why, I guess going back to the original pre-approval, when you're getting pre-approved with George, he's going to give you a budget so that when we put in an offer, we know that you can afford to purchase that because you'll be approved for that mortgage. So generally what we do is we make an offer contingent upon specific things. It's contingent upon home inspection. Generally, it's contingent upon if it's a condo, a status review. A status certificate is basically the financials and the logistics of the management company that manages the condo corp that you'll be moving into. And generally, we like to make it contingent upon financing because we want to ensure that the lender is able to approve on that specific property. Okay, so next. So the next obvious phase would be close the deal and move
That
in.
went too fast there.
It's okay. So basically what happens is we don't like what I do in terms of what I have a white glove service. So once you're closed, I, will refer you to several uh, lawyers to make, and this actually we do in the beginning. I refer you to a mortgage broker and I refer you to lawyers so that you know all your costs up front as to what you are to expect during the home buying process. Um, I also navigate through how you set up your utilities, how you would get home insurance, like uh,
Sorry, Helen.
where
I
you
think
would like
I
get
think
all your
I went
like
too fast on the slides
it's
here.
okay. When you're moving, um, you need to change, like you need to update your address and just like all these little things that you may not think at the time. Like I'll give you a nice little checklist so we go through and make sure that you've expedited on them so that you move in and it's seamless. Because ultimately it's not just the transaction, it's the experience, and we want you to have a great experience. So just a quick recap: we check your credit score, we get you pre-approved for loan, we figure out how much you can spend, you find the right agent. Hopefully, I'd love for you to pick me. We go house hunting, which is the fun part. um, because you'll find that whatever you see online in pictures may not necessarily translate to reality. um, we make a fair offer. We schedule a home inspection and fulfill any other conditions. And then we close the sale, move on, and then you'll hear from me soon for your next financial update.
And
And
if you
this is my information.
want to get a hold of
We're going to
Helen,
put
her
it on
phone
the chat.
number,
Here, I'll just drop it and take a screenshot of it.
email, and socials.
Uh, that's me.
Perfect. Well, we've learned a lot over the years of doing this, and we know that a lot of buyers do screw up the home buying process. And like I said earlier, we're here to avoid some of those. But based on our years, I can tell you that about 90% of first-time home buyers essentially end up in the wrong house or it was the wrong deal. And our job is to sort of steer you away from that. So, mistake number one. A lot of home buyers don't take advantage of buyer benefit programs. Someone in the chat did mention closing costs. We're going to talk about that right now. So, a couple of buyer benefit programs that exist that you might not have heard of. So, first time home savings account. So, if you're looking to buy a house, you should have a first time home buyer savings account set up. I will go through that. Frontline worker program. So if you're a nurse, you're a doctor, you're a teacher, you're in the frontline program, there are programs out there specifically designed for frontline workers. Why would someone not take advantage of that if that's the field that they're in? RRSPs. You can actually pull money from your RRSPs, and the government recently increased the amount to put towards your first time purchase. And as someone mentioned as well about closing costs, one of those is land transfer tax. There's a transfer tax rebate that exists for first-time homebuyers. So just to go back into this, the first-time homebuyers tax credit account. So if you're a first-time buyer, you can claim a tax credit worth $1,500 on your federal return when you buy your first home. First-time homebuyer savings account. So this account lets you grow your down payment up to a maximum of $40,000. So you can put $8,000 per year could be put into this account. You're not taxed on it. In short, it's one of the most powerful tools available to help someone buy their home. It's an account where you can save your money and let it build up there. First time home buyer savings account. Go to the bank, any of the big banks, they all have this program out there for you. Frontline worker program. So some lenders have discounts if the buyer is a frontline worker. It could be a rate discount, could be a cashback offer, a closing cost rebates. They're a little bit more flexible on the underwriting. There's programs out there for the RCMP, Department of National Defense program. So there are frontline worker programs out there that exists, and it gives you some of these benefits, but a lot of people have no clue. They just walk blindly into the bank and they're like, I need a mortgage. Uh, the other one, the home buyers plan, the RRSPs. So up to $60,000 you can take if you've built up your RSPs over the years, you've been building for several years. That's the maximum amount you can take to put towards your house purchase. And if you had two people at 60,000, that's about $120,000 per couple. And as someone mentioned, the closing costs. So if you are buying a house in Ontario, you can get a $4,000 back on your provincial land transfer tax. In Toronto, there's an additional rebate up to 44.75 on municipal land transfer tax. So there's a lot of tax refunds you can get as a first-time home buyer. Your lawyer will be able to tell you that. We can talk about that in the pre-approval process, but there are options out there for you to get a tax refund and to help you on your closing costs. And there's one more thing I guarantee you, most of you have probably never heard of this. I would wager to say 80% of mortgage people and the same amount of realtors have no clue of one more programs that exists, and it is our home buyer assistance program. It is a down payment assistance program. So we have a program out there that can help you with your down payment. You might be like, George, I don't have $60,000 to put towards my house. We can help you with that. So I'm going to give you some basic numbers, and we'll run down a simple scenario. So let's say you're buying a house and it's $1 million. The minimum down payment for $1 million house is $75,000. That's what you need in your account, not including any sort of closing costs. But that's what you need. But if you're putting $75,000 down on $1 million mortgage, my gosh, your payments are going to be insane. So how do we make this a bit more manageable? What if you could put 20% down? That's about 200 grand. Now you have $800,000 mortgage. That's a way more manageable than $1 million. That $200,000 makes a huge difference. But you're like, Jordan, I don't have $200,000. What if you had 5% of the purchase price? What if you had 50 grand? You've saved up over the years. You got 50 grand. We have an investor. One of them is Scotiabank. So this is regulated by OFSI. It's a regulated government program, and some of the investors are private investors, and we also have investors like Scotiabank. They will provide the other 15% of the down payment to get you to a 20% down payment. So you bring in 5%, the private investor brings in 15%, and that's how a way to get into home buying that a lot of people have no clue that this is possible. The When we look at that 15 and that 5%, it's an equity split of 75-25. 75 for the private investor and 25 for you. And in the long and short of it, I'm not going to go through all the detailed calculations for this program, but essentially, by the time you exit this program, let's say you buy a house, you sell it in 3 years, you will generally walk away with more money than you walked in with. So everyone benefits. It gets you into the housing market, gets you building equity faster, and it actually just you will leave with more money than you exited.
So, Trish, we have some questions about how, like, what is the interest on this? So you were saying, I guess, if you want to elaborate on the what type
Sure.
of.
So the interest will
Yeah.
depend on your credit score, essentially. That's what it comes down to. Your
It,
credit score.
this is
So
a co-ownership program. Like that's the grunt of it. It's not specifically that it has additional costs, is that you're going in owning it with a company. That's
Yeah, yeah. So let's be
that.
very clear. You're not paying interest on that 15%. Like that's not it's not a loan that you're getting. It's kind of like a hot water tank rental, right? Where there's a lien on your house, but there that money is being provided and you're not paying interest on that $150,000. It's not a loan. They are in this together with you. They're even going to help you with the closing costs. They're going to pay their portion of the closing costs. And let's say the market tanks, they will share in that loss if there's a loss. So they're in it with you together to the end. And like I said, it's one of the investors is Scotiabank, and this is a regulated government program. Uh, but essentially, the mortgage is we have a few different lenders who um, are lenders for this program, and like I said, it's the interest rates are really good. Well, let's say you're not in Ontario. There's a whole whack of other first-time buyer benefit programs in other provinces. I'm not going to go through all of them, but essentially there's a lot out there if you intend to move provinces.
Also, I just wanted to touch up on one point. I'm not sure, like, if any of you have previously owned a home in Ontario, if it's been more than 5 years since you have owned a home, um, you're then considered a first-time home buyer again, correct?
Yes, yes, that
I think
is
that's a
the
key as well. So I'm not
it's an
sure if
odd
you're
it's an
on here
odd
for
thing that you're a
a
first-time
first-time
home
home
buyer.
buyer, but maybe you didn't know this. If you owned previous and it was past 5 years, you would qualify again.
That's right. Couple of ugly facts here. So the big banks, they will steer you away from most of these first-time homebuyer benefit programs because they don't offer them, they don't understand them. And that's their job. Like they're doing what they are there to do, to steer people away. Your friends, everyone has an opinion on real estate. And just like everyone's been to the hospital, they have an opinion on the hospital. They've been through our educational system. They have an opinion on schooling. Everyone has an opinion. Friends are great, but it's really more important to talk to a professional who understands what the ins and outs of the market. Mistake number two, shopping before getting pre-approved. Really important. Helen had mentioned this before. You don't want to go shopping before you're pre-approved. It's kind of like making a cake. You're having a get together and you have all the ingredients and like you're baking this cake and like it's looking really good. You're even like taking a swipe of the batter. It tastes phenomenal. You're all excited. You're gonna put this cake together and this comes out instead. And it's like, oh my gosh, now what am I going to do? And then you're running to the Apple Market, to the supermarket to buy something because this is what your cake looked like. Because you were not using the right ingredients, you didn't have the right people, and that's what it came out to. We want to avoid that from happening. It's really important to get pre-approved on your housing journey. You will know how much you can afford. Helen mentioned that before as well. The worst thing is to get out there, go shopping, and then like, oh man, I love that house with the pool. Just wish I could afford it. Focusing on the right market and the right property. And again, Helen mentioned that before. That's her specialty to help you zoom in on those areas. And shopping with confidence. Like you're like a boss. You're gonna walk out there and you know exactly, like there's no intimidation. You know exactly what your numbers are. And it's also as a seller to deal with someone who knows that they're a serious buyer. Mistake number three, not having a professional dream team with you. Uh, we've all seen the dream team. Hockey Canada getting gold, and it's just phenomenal to have a dream team with you. You need to have your real estate dream team. That's myself, the mortgage broker. Love to be part of your team. Your agent, there's Helen, and then Obviously, you need a home inspector to inspect this house that you're going to purchase, and a lawyer. When I bought my second home, I did not get a home inspector because I knew everything. I'm like, nothing's gonna go wrong. I went inside, I bought this home, I waived all the conditions. I was like super confident, and then just before closing, the basement flooded, and now I'm buying this house and $20,000 of basement renovations that I never had planned for. A home inspector would have noticed that the hot water tank was leaky and would have avoided that cost as well. So there's there's tons of these examples out there. We want to make sure you don't have them. Mistake number four, not having stable employment. So employment's really important. It's one of the major factors of getting a mortgage approval, having a job. And when I say having a job, having stable employment of 3 years or more. And that just demonstrates to the bank that you can hold a job, that you're responsible, and that you're in it for the long haul of it. What about someone who's part-time? You're a waiter, you're a waitress, hairstylist, um, part-time work, Uber driving, or cash tips. As long as that's deposited in the bank on a regular basis and we have a 2-year history of it, part-time income can work. We cannot use part-time income if it's inconsistent or we don't have a track record for it. And number three, we can qualify you, and let's say you're self-employed. We have a lot of self-employed people, contractors out there, drywallers, tilers. They're self-employed. They don't want to demonstrate to the government all the money that they make, so they always claim less on their taxes. We can qualify those individuals based on their bank deposits. So what I'm trying to get to is there's different ways of getting that approval based on the employment status that someone has. And what if you don't have 3 years of employment status? You were in school and you just got out of school. In fact, we have a client right now who just got out of nursing school. She graduated. She's going for her first interview right now as we're talking, and that's okay. The banks understand that. Instead of 3 years of employment, we have 3 years of schooling.
And
And
also, you should add that because she's a first line worker, you're able to get their mortgage at a lower rate.
that's right. So she is a
Right.
first, she is a frontline worker. So there's a few benefits for there as well. And the employment gaps. We want to make sure there are no gaps. If there are, we need to be able to explain the gaps. Why were you not working for 2 months? What was going on? And again, all of this avoids financial stress and knowing your monthly payments. Mistake number five, down payment mistakes. So whenever you buy a house, you need to have what's called a down payment. This is the money that you've saved up over the years that you're putting towards your purchase. And in a calm world, you can stop, you can think, you can breathe. And in an ideal world, your money has been in your account for 90 days. The bank will ask you for it. I'm going to ask you, heck, the bank, I'm going to ask you for 3 months of account history for your funds. And the reason for that is the bank wants to, like, they're really cracking down on money laundering and money coming from proceeds of crime. So that's why they will ask for where was the money for 90 days.
So, George, we have a couple of questions in the chat.
Sure, yes, if you want to.
It says so Felicia asks what type of home falls under a 5% down payment? Like what's the
Uh,
maximum
uh,
amount? Is it
Anything, I think it's 1.5 million or less falls under the 5% down payment.
and then we also have another question. Let's say I don't have a down payment.
Well, that's why we have that down payment program, that down payment assistance program. And if you don't have anything, then again, we can do a financial analysis, get you on the right track to start saving up for that down payment. And the other way to get a down payment is from direct family. So parents can donate to their children, and vice versa, siblings. So as long as it's direct family, that's another way of getting your down payment. So in an ideal world, this is your bank account. You have one account and you have 3 months of history. Boom, George, you print it, send it to me, and I got 3 pages or 4 pages of down payment history. This is the easiest way that someone could set up their accounts for an easy approval. But more often than not, this is what we see. We see like there's money in savings accounts, there's money in TFSAs, we got checking accounts. Heck, I we have we have a client who has money in metals and gold. So people have money in crypto. So they got all these different accounts. They know it equals to whatever that amount is. They know, but I can't send this in. So I'm gonna need 3 months worth of account history for all of these accounts. That's a lot of paperwork, and it creates a lot of work for a lot of people. And the info that we send to the underwriter, this is not going to make them happy. They're going to look at this and be, oh my gosh, like kill me now. And I had a client like this. We had part-time income. The accounts were all over the place. I had 3 pages of notes to the underwriter to explain where each account was coming from. And it just made for a really hectic process. We want to avoid this. You know, you're buying a house. You know, your house buying is going to happen in a few months. Consolidate your accounts. This is what we want to see. It makes my life easier. It makes your life specifically easier because I'm going to ask you for all these documents, and you're going to start cursing and you're going to get upset and like, what, I have to give all these documents. Consolidate your funds for your down payment so it doesn't look like this. Save, and the down payment, like I said, has to be your own saved funds or gifted by a parent. And as long as there's no large deposits within that 3 month history, the bank's going to be okay. So if there's a large deposit, maybe you saved up like, I don't know, you have $10,000 worth of cash, don't go deposit into the account. The bank's going to ask you, I'm going to ask you, the underwriter's going to ask you, everyone's going to ask you, where did it come from? So, two types of down payment that we have when buying a house in Canada. Essentially, you can put 20% down payment. In that case earlier of $1 million, that would be 200,000. If you don't have that, then there's another scale of home purchasing. And this is what's called a high ratio mortgage. And you're going to see the down payment can be anywhere between 5 and 19%. And when you're looking at mortgage rates that are being advertised, they're always advertising the 5 to 19% down payment rates. Those are always really attractive. That's what's advertised. Uh, but these are the two forms of down payment. We're going to ask you, what does the down payment look like, and how much are you going to put towards it?
And George, I just wanted to add to that. I feel like this,
Yeah.
what I had a common question when I was in banking is that the banks and mortgage companies will not lend, they're not able to lend directly a high ratio mortgage. It has to be insured through an insurance company.
Oh, yes. Yeah.
So, and the
That's
insurance company is the one that has rules that you have to follow by because it's being underwritten by them. So that's something important to know.
That's correct. And in fact, just on to tag on to that, whenever Helen and I are working towards a condo purchase, I always call the insurer to make sure, hey, is there anything wrong with this property? Uh, and that's sort of what we do to protect.
Remember what happened to us last New Year,
Yes, I do with
right?
a, yeah,
Right.
with a client. I called and they're like, yeah, everything's fine. And so the everything was fine with the insurer, and they hadn't seen anything. And Helen was asking for what's something called the status certificate, and this realtor was like refusing to provide this thing up until the last minute. and the lawyer caught it. You said,
We usually get a digital copy of this, but I had to go and scan over 250 pages worth of it. But in the end, it turned out, like I said, a status certificate outlines the financial status of the company that's running the condo corp. And it turned out that they hadn't filed their taxes in they hadn't filed their financials in 4 years.
so
So
imagine
that is a big
purchasing
red flag. Yeah.
purchasing that condo, waiving all the conditions. I'm going all in. That's great. You just might not be able to sell this thing. So it's really important to have that added protection.
So we have a couple of questions before we
Sure.
go
Yes.
forward. Okay. So what we are what's the best way to consolidate the funds, like put it into an FHSA or savings account? Like I guess depending on where they're all coming from. Ideally you want them in a savings account, right?
Yeah, I mean, it depends how much money we're talking about. Obviously, the first-time homebuyer savings account has a limit, so I would max out that account first, and and if there's funds left over, then drop those into a savings account. I'm not
Also
saying
you
we have
want
to
to
have
know
an
like
account. We want to just have as few as many.
Also, like you want to know, it depends. Like I know when I worked at the bank and people were taking their money out, like some of them had it in a TFSA and they would have to sell off specific items, like depending on where you have your money invested, if it's like locked in into a GIC or if it's in mutual funds or stocks, like it all depends because each one has different timing in terms of relinquishing the funds and getting them over to a savings account. But ideally, like again, we do a pre-approval and then we do a financial analysis so that all these points are covered so that you know when it comes time to put an offer how to execute and to be properly organized because a
Like we
lot of things can go wrong if you're not aware.
we even have a client who has money in gold, right?
Yes,
So
yes, we've had that. Yes.
yeah, all right. So my next point, this is something that it's a bit of a gripe for us. So the banks are exceptional marketers. They have been doing this for 50 years, and they have trained Canadians to always ask one question and one question only: what is your best rate? That is the most common question that we get. And the industry's done a poor job of rephrasing that question and making people understand it a little bit better. So, with what is your best rate comes a whole bunch of other questions. Are you buying? Are you refinancing? Are you transferring your mortgage? Do you own other properties? What's the percent of your down payment? Are you a first responder? All of these things will dictate heck, even the credit score. I forgot to put that on there. Your credit score. All of these things will dictate the type of rate that you're getting. And it's and they all have different rates. And we've done a poor job. The banks are always advertising first-time home buyers with a 20% or less down payment. That's the only rate they're advertising. They're always really attractive, and that's what you're seeing out there. But it really comes down to everyone's different on that scale. I want to introduce you to Jordan. It's a real client, uh, not a real avatar. He owns a rental property. He was denied by the big bank. I'll let you guess which one. Not giving any hints out there. Uh, and he was denied because the rent he wants to buy a principal residence, his own house for himself, but the rental property was dragging him down because various different lenders will look at rental properties in different ways. We were able to offset his rental expenses by almost 80% to get the approval. I called him up and I'm like, "Hey, Jordan, this is your purchase price." And he said to me, "I'd like to know how you finagled that for me." And I said, "This is what we did. We went to one of our uh, broker lenders, and he's getting top rates, best rates, and is also getting being able to make that purchase because we offset his expenses on his existing rental. Something not the big that the big banks can't always do. Every bank looks at rental properties differently.
Also, I guess to add to Jordan, like how Jordan came about, Jordan was my client and he came and he owned a property in Peel region and works downtown and wanted to rent something for close to $3,000 a month. And I told him, you're nuts. If you have a deposit and you have another property that's earning rental income, you need to buy something. You should not be paying someone else's mortgage. You should be paying your own. And then I introduced him to George, and George made the impossible possible.
And oftentimes I tell people, what's the point of the best rate if you're not approved, right? And truth be told, we all have access to the same rates in the broker world. It's just being able to understand the different strategies and the different products of the banks. And that's where my expertise comes in. I want to introduce you to one more client. Here's Alvin. And when I called him up, we had a discussion about prior, and then he's like, George, find me the best rates and give me a call back, which we did. And when I called him up, I said to you, what matters more to you? Is it the lowest rate or the lowest payment? Because the two are not the same. So there was one option here, the same balance, 4.24%. Monthly payment was 28.96. Here's a lower rate of 4.14, but a higher monthly payment. And the difference was one is a 30-year amortization, the other one was a 24. So it's not always the rate. If you're like talking to a buddy who's like, oh, I got a really good rate. Okay, perhaps. But what was happening once we open up the hood, what are we looking at, right? So it's not always the rate. And just to move on, mistake number 7, credit score. Helen mentioned that if you're concerned about your credit score, relax. There's a way to fix that credit score. It is not a score that is set in stone and it's not permanent. Credit score essentially is like it's like what's your likelihood that you're going to pay back this money? Let's imagine you were loaning money to a friend. Are they going to pay you back? And if you know that they're casino uh, dropping people and they just love to spend money left, right, and center, they're probably not going to pay you back. And that's what the credit score indicates, your likelihood to pay back loaned money. And most Canadians are in that 720 range. And the top of the line is 900. My little graph doesn't go to 9, but it is 900. But again, most Canadians are in that 720 range. And what if your credit's a little bit lower than that? Um, I'll get to that. But first takeaways, nobody can pull your credit, not even myself, without your explicit permission. I need to cement that in there. When I ask you to pull your credit, I will get in writing, I will get your signatures to ensure that I can pull it for you. Soft pulls are generally fine. Like if you're going to go buy a cell phone and they just want to check your credit, that's considered a soft pull. Those really don't affect you. And your credit fluctuates. It's very normal for it to go up and down and all over the place. But what if you have like a 500 Beacon score or a FICO score? Well, a couple ways to repair. You should have a minimum of 2 credit cards, not one, but 2. You got 3 or 4, that's fantastic. The more credit cards you have, just identifies that you can juggle money a little bit easier than it just if you had one credit card. So you want to have multiple credit cards. And this is a practice that I've started doing. I always pay more than the balance. So for example, let's say my balance on my card is $400. I'm going to pay 410. Now, I've talked to Equifax and they've assured me that this plays zero role in affecting your credit score, but it's a habit that I've used and I will continue to do it because I find it does help my credit score, although Equifax has denied that. And I'm getting a spinning ball on my laptop. Oh my gosh. Uh-oh. You there, Helen?
I'm here.
I don't know what my laptop's doing.
That's okay. Continue. I think we all can
I,
hear, right?
I
Yeah.
can't advance the well,
Oh,
this is quite embarrassing. Uh, are you monitoring the chat by any chance?
I am. Yeah.
Okay.
Yeah, everyone can hear.
I'm not sure what's going on.
Oh, I can't click forward either.
Oh my gosh.
It's okay. Just,
Okay, I'm gonna stop the share for a second,
yep.
and I'm gonna see if I could restart this. Okay.
And then we had a couple. So basically, whatever questions I haven't answered for you in the chat, we will get to them. Also, we'll let you know what we're offering to everybody on the call today, which most likely will answer all of your questions. Yeah, they can still see the screen.
Wow, this is unfortunate. Okay. Um, what can you guys see? It's like,
We just see you. We don't, the deck is gone.
okay, all right. The deck is gone. That's
It's okay. It'll resurface itself. Yeah, we can all see you.
well, great. You can see me. Okay, hold on. Let me just stop.
Your laptop is tired. They're like, we're done. We're taking a break. We need to recalibrate.
Maybe, yeah. It's okay. I'm gonna close that and reopen it again. Are there any questions in the chat in the meantime um, that I can answer as I'm reloading? This has never happened. This is the
So they're
first.
asking about rent to own. Um, it's okay. You get us raw. You can ask any question. We're here. So we do work with rent to own companies. And again, each one of you will have a very unique profile and unique scenario. What we plan to do is the analysis that George and I do for all of our clients. We want to extend that to all of you, where we would go through a complimentary analysis, help you understand your credit, help you understand what needs to be done in order to accomplish um, purchasing a home, and then also outline all of the costs based on your situation of what a home purchase cost, like all total cost would entail. And again, a timeline, which I think is important. So the reason why George has become one of my go-to brokers, I do have access to many, is because George has a different array of products that think outside the box. So generally, where I would have a client like Jordan, where I would have sent him to someone else and they would have been like, sorry, you're not approved. Right. And then Jordan would have been stuck paying $3,000 a month to live downtown, and that he would have had to go out of his pocket each month. So we do have everyone's contact information as well. So we will, if you want to private message me, if the contact information you provided us is not up to date or it's a little bit different than your preferred one, you can private message me and I can get that. Um, And then we also had that link at the beginning where you could book an appointment with us.
Okay, I think I'm back now.
You're back with us. Amazing.
Perfect. Do you see that?
We do.
Okay, all right. I just had to restart and but yes, as I was saying, uh you want to pay the minimum more than the minimum balance. It's not a lot, $10 more. And as Equifax said to me, that doesn't matter to them, but this is a practice that I've adopted. It's your money anyway, so you're not losing this money. And the big red alert here, if you're buying a house with someone else, I don't care who you're buying a house with, and it is a few days, a week before the closing of your deal, do not go and buy new furniture. Don't go buy a new car because the lender can pull your credit even the day before. Don't lease a car. We had a client just a while ago. She wanted to go buy a whole new array of furniture. It's like, no, don't wait till closing happens. Because we don't want to derail something at the last minute. And we're almost done. Mistake number eight, just don't get intimidated by the numbers. I get it. Interest rates are a little wonky right now. They're all over the place. Who knows if they're going to go up or down? Prices are like up and down, and some places are selling really fast and others are not. But you need to know your numbers. There should be
George,
no.
I wanted to elaborate on, I guess, going back to like you're maybe some of you are wondering like why we're saying don't go buy furniture. Like
Oh, yes, yes.
what happens is it's called the ratios. It's gross debt servicing and total debt servicing. So what happens is you are approved based on your ability to afford this mortgage, and the banks have a very stickler um, formula. So once you go outside that formula, like i.e. you take on new credit that you have to pay back, you then throw your ratios out of whack, and then that throws the bank out of whack, and then that jeopardizes your mortgage.
That,
So that's why it's important.
that's correct. Yeah. So a couple of things you should know: title insurance, lender fees, lawyer fees. These are all fees that you have to pay. You need to know your monthly payments. Some people like biweekly payments. Some people will want accelerated payments. Everyone's all over the place depending on their type of income that they get. And you should know taxes and insurance. These are all the things that we discuss in that pre-approval process, uh, in knowing your numbers. And this is a slide I included because I kept getting asked who pays me. So if you're going off to an A lender like First National, BDB Bank, um, these are A lenders, TD, for example, BMO, they pay me. They pay me 100% of the way. That's how I get paid. It's a referral fee from the bank. And I choose the best lender for your product, and it's a hard stop right there. But let's say your credit score is really low and I can't go to those A lenders. Well, then I go to B lenders and they don't pay the same amount. So sometimes you're going to see that working with a broker, that a B lender will charge a fee. In fact, the lender charges a fee. So, and it's typically 1% of the mortgage amount. So the bank is going to charge a fee. And if you're off to a C lender, we can see the letters A, B, C, D, and E, and F. Then this is where the client pays 100% of the way. And this is an idea, for example, going for private financing. I had a friend of mine who bought a property. He didn't qualify with the banks. He went to a private lender and he paid the lender directly. So there's different categories of where we are, and we can graduate. First National, for example, they are an A lender. They also have an alternative A lending side, which falls under this B category, and they work with you for a year. Interest rates a little bit higher, not by much, and they will graduate you over to the A side. And the last one is a lot of mistakes that people make. They don't hire a gladiator. Any dummy can input data. Anybody can go unlock a lockbox. These are not hard things to do. My job is to pick up the sword and fight viciously for you and use a shield to protect you from harm. That's what I do as a gladiator. I'm there to fight on your behalf. Helen is there to fight on your behalf. And we want your kids. I want your kids to go to a better school than you did. You want your kids to go to a better school than you did. Uh, to guide you to build more equity faster, to retire earlier. I have a whole seminar I do on just how to retire earlier with your mortgage. Uh, and we try to make the impossible possible. And selfishly, and it really is a selfish one, we want to make insane raving fans from you. We want that applause that we were able to help you in your journey to get to the finish line. So some of the things that we do, we will build you a custom budget proposal. Helen will fight and negotiate for you. We're going to call in favors from lenders. In fact, to give you an example as favor from lenders, we had a client last year. It was New Year's Eve when people are drinking and they're partying, and I called up the lender and he answered. And not just that, on New Year's Day, he called again and we spoke. So the bank, I guarantee you, is never going to call you on New Year's Eve. Never going to call you on New Year's Day.
And then the same transaction, the lawyer that is part of our team, he reviewed the status certificate on New Year's Day.
And you might be wondering, like, well, what's happening on New Year's Day? Of course, the bank is going to call me. Uh, Listen, offers happen all over the place. Sometimes they even happen on New Year's Eve, and we don't stop just because it's party time. Uh, and we're gonna also insane copious amounts of coffee and caffeine to keep us awake. And like I said earlier, it's not about just the mortgage product, not about the bank. It's just employing the right strategies to get someone approved. For example, like Jordan, where we're able to offset some of those expenses. I've been doing this for a long time. I know what I'm doing. Is every tactic we're going to work used? No, not every time. But we will pull it every stop along the way. I will not rest until I can get an answer. And after fighting on your behalf, we're going to be bruised up and scratched up, but we will get you to the finish line. So to recap, work with professionals, the home buying process, the buyer benefit programs, income credit, down payment, employment. That's what it comes down to when you're buying your house. So now that we've gone through that and the little hiccup in the presentation, how are you feeling? I know it was going pretty fast. I'm trying to respect your time for this as well. But how are you feeling now that we've gone through this? Are you feeling a little less concerned, less stressed out? Do you think you could look in the mirror and say, you know what, I think I have a better understanding than before you came into this webinar? If you want to, feel free to drop something in the chat. I would love to see what your responses are if you're feeling a little better.
We've had some questions about how to get like people wanting to get pre-approved and asking about their current situation and how we get them approved. So I guess
Sure.
perfect
I'll,
segue.
I'll get to that. Yeah. So your job is to tell me and Helen what you really want. We're going to worry about how to make it happen. And everyone is here choosing a gladiator to work with. In our case, we hope it's Helen and myself, and we're going to get you all the way to step number 6 to get the keys in your hand. That's what we do. There was a bonus. I did say there's a bonus. If you're stuck to the end, there's some bonuses. If you want to scan that QR code, it will take you to a link where you can watch a short little video on being a first-time home buyer. So I'll leave that up there a little bit. You can scan that code.
I've
It's
also put it in the chat as well, just to make it
it's
easier.
the QR code that The QR code is a different link than the one posted there. I had to when I was restarting the webinar. It's anyways, it's the QR code that works. And when you get in there, you're going to see something called Explore Journeys, and there's one called First Time Homebuyer Strategy. Little video you could watch on your own time to give you a better understanding of that process. Bonus number two, because you stuck to the end, there is a mortgage calculator toolbox. So if you scan the QR code, it'll take you to a little link. It essentially brings you into my telephone, and it's a calculator in your pocket that is specifically designed for consumers. And it's maybe you're trying to get a hold of me, and I'm on an airplane or something, and you can't find me. That's okay. The app is there at your disposal, and we find a lot of people do like the app that's there. And third, and if you can't scan that QR code by any chance, I can send you a link to this as well. And those who stuck right to the end, bonus number three, we will reimburse your appraisal after closing. So something I didn't talk about. When you're buying a house, the bank needs to verify the value of your house. It's called an appraisal. And that could be anywhere between $500 or more. And it's just to determine, like, is it worth what you're paying? And we will reimburse that cost for you. And trivia. So I do have a couple trivia questions. You stuck right down to the end. So for the rules for the trivia game, write all the answers down at the same time in one chat. So don't start responding to the trivia questions independently. And there is a prize too, by the way. So trivia number one, get real estate advice from your friends. True or false? Number two, how many months does down payment need to be in your account? And trivia question number three, buying a home is like a smoothie of real estate because you always want to blend your whole dream team together. It tastes better with protein. You have to drink it fast, or it comes in vanilla and chocolate. So just would love to see any responses. One, two, three, put them in the chat all at the same time. Helen, are there any? Can you see the chat? Hello? Let me see if I could.
Yes, Elsa.
Okay,
Congratulations, Elsa.
wonderful. Okay, wonderful. Also, we will be sending you a Starbucks gift card
Yeah.
as a trivia prize for that.
Elsa,
So,
if you don't mind sending me a private message with your email address and phone number so I know you're the correct contact information, that'd be great.
so if you were to search out real estate for first-time home buyers mistakes, you're going to find a lot of these things. Not getting pre-qualified, inspections that don't work, realtors that don't care, and credit, applying for credit before closing. You now know better for all of these four things. And that's what our goal was, to get you here. And there's one more thing. If you would like to work with myself and Helen, uh, this is a direct QR code link to my calendar. You can book a time for me, and we can go through uh, that pre-approval process. We can have a short little discussion. There's no obligation for anything, but we're gonna call everyone actually on this list. We will be offering a free consultation for everybody. But if you want to jump the gun and you want to get that done sooner than later, this will take you straight to my calendar, and you can book a 30-minute time slot, and we can have that conversation. Guys, have a wonderful, wonderful remaining Thursday night.
Everyone stay warm. Hopefully the weekend forecast is incorrect and it's not as cold as expected.
Folks, on behalf of myself and Helen, have a wonderful night, and thank you so much for joining us.